markets may have finished this day on a mixed note, but if you've been watching in recent months, you'll have noticed the markets have continued to be strong despite continuing concerns around the shutdown, tariffs, and inflation. In fact, the broadest index, the S&P 500, and the tech-heavy NASDAQ have set records more than 30 times this year. And there's other data that suggests the economy is still chugging along at a steady clip. But that is only part of what's happening. As our economics correspondent Paul Salman reports, for the vast majority of Americans, this economy is landing very differently right now.
This is Meta Ray-Ban display.
You don't have to look far to get a clear view of those at the tippy top of the economy.
The first AI glasses with a high-resolution display.
Mark Zuckerberg's Meta paying $250 million to recruit an artificial intelligence researcher. A proposed $1 trillion compensation package for Tesla CEO Elon Musk. Former Google head Eric Schmidt's purchase of a 123-room, $110 million LA mansion to host events. But well below the hyper-rich, millions of other Americans are also prospering. As evidence, 56% of luxury consumers, according to Saks Global, plan to spend the same or more this season compared to last, up substantially from just last spring.
Luxury travel continues to hold very strong.
Misty Bellis of luxury travel network Virtuoso sees the same.
When we look at our fall bookings for this year, we are up 38% year over year.
If I wanted to go buy a Rolls Royce, I could do it right now and pay cash.
Paul McGarvey and his wife aren't big travelers, but comfortably retired, they are insulated.
I do a net worth survey on the Fidelity website every week, and it just does nothing but go up. All right, my net worth keeps going up.
John, a retired engineer, is also pretty comfortable.
I own my own house. I own a couple of cars. I have everything that I really want.
Problem is, even when you include these upper middle income Americans among the prosperous, that still leaves a full 80% who are feeling squeezed, like geologist Timothy Runkle.
It doesn't really matter what I'm doing in my career or what other jobs that I'm pursuing. It just doesn't keep up with what the necessities of life are right now.
Donna is in sales.
I haven't taken a vacation in over almost 2.5 years.
Joseph Williamson, a city planner in Collinsville, Illinois, proud home of the world's largest ketchup bottle.
Honestly, right now, as we speak, $200 to my name, maybe.
Fiore Berhana, assistant professor.
I have student loans and medical debt.
Emily Zorena is a librarian.
I'm finding myself needing to use like the buy now, pay later things for bigger purchases, such as like car repairs.
One way to depict the increasing split between the top 20% and the rest of Americans, says economist Mark Zandi, the letter K.
The folks at the top part of the income and wealth distribution are doing fabulously well. And of course, folks at the bottom part of the K, lower middle income households, they're struggling.
Heather Long wrote about the K-shaped economy in the Washington Post.
This economy right now is being driven by spending from the top 20% of Americans. So that dividing line is roughly $175,000. Families that earn above that mark, they're living la vida loca. They're out there, they're spending on birthday parties and lavish weddings and big trips abroad and growing their spending month after month. And the rest of America, the bottom 80%, they're cautious right now.
Their incomes haven't kept pace with inflation. They're encumbered with debt. They don't have any assets.
Assets to benefit from.
The stock market is booming. We have record valuations. All of that accrues to the folks with big stock portfolios, and that's in the top 10, 20% of the distribution. They own their own home. They own bonds. They own crypto. They own lots of stuff.
Of course, American wealth inequality is hardly new. Point is, it's getting worse.
You can go back to kind of the early 90s and the top 10%, the wealthiest Americans, they would account for 35% of overall spending. So a pretty good chunk was reliant on the top. But today that number is basically 50%. Half of spending is now dependent on just the top 10%.
That's households making about $250,000 or more. The economy's more reliant on them than ever. Official consumer spending is rising thanks to folks like Bellis's high-end travel customers.
Suites are still selling very well at hotels. Junior suites, anything that's in the upper category there, business class, premium economy, all of those upper categories continue to hold strong.
Washington, D.C. realtor Michael Rankin specializes in the luxury market.
It is very strong and very robust. They've been buying and spending a lot of money.
In fact, his challenge is there aren't enough houses for his high-end clients to buy.
What we have now is a scarcity of supply of the super high end, and our marketplace is 7 million, 10 million, 15 million, even higher. I have active buyers and clients who are looking for something very special, very well renovated, very well presented, and there's just a scarcity of supply.
But while the well-off are fueling the economy, so many others are pinching pennies, looking to spend less on just the basics at discount stores like Dollar General, which recently reported an increase in middle and higher income shoppers. And budget grocer Aldi is America's fastest growing retailer.
I'm spending sometimes upwards of $150, $200 a week on groceries.
Joe Williamson's pay is barely keeping up with prices at the store, like so many Americans.
I used to be a person who would pay off my credit card every single month. I wouldn't keep a balance at all, but I have had to start keeping a balance, and I'm not able to pay it off every month.
Pretty good. This summer, Jessica Cuevas and her husband moved their family to Mexico because they could no longer afford to live in Chicago on her husband's $67,000 a year salary.
Rent is about $1,000 US. In Chicago, where we're from, it could be anywhere between $25,000 to $5,000.
And Cuevas can work too, since she can now afford daycare.
That alone is about $150 a month compared to $1,400.
Now, the K bifurcation isn't just among households.
There's also a K-shaped situation going on the business side. And you can look at the stock market, and it's being hugely driven by a handful of superstar tech companies that are involved in the AI boom. And they're just in a totally different league right now than everybody else.
And they, it turns out, are driving the economy.
In the first half of 2025, spending on AI was as big of a contributor to growth in this country as consumption. There's a lot of risk to an economy that is so heavily reliant on this AI boom and the rich, and there could be some pullback. If your chair has fewer and fewer legs to stand on, it's a lot easier to knock that over.
Meanwhile, the AI boom means more data centers devouring more energy, driving up electricity prices for the already strapped 80%.
Everybody around me has either doubled or tripled in their power expenses, and we can't afford it.
Not to mention rising rents as investors buy up residential real estate.
My rent is going to continue rising, and my pay isn't.
So why not buy instead?
I do not feel like I could ever buy a house. That's not even on my radar, quite honestly.
Just 25% of Americans these days feel they have a good chance of improving their standard of living, a record low.
Why do you suppose there hasn't been a revolt from the bottom? The pitchforks, in one cliched version of the revolt.
There's clearly a lot of skewing of the income and wealth distribution, but times historically when you've seen, as you say, the pitchforks coming out, the skewing is much more pronounced. We're not living in Paris, France, circa late 1700s, for example.
That is even the bottom arm of the K.
Making $50,000, $75,000 a year here in the U.S., your standard of living, just given the improvements in technologies and everything else, is probably as good as the Hearsts were back 100 years ago when they were in their castle.
A castle without air conditioning, TV, the internet, access to modern medicine, and so much we now take for granted. On the other hand, that man's home was a castle. For the PBS NewsHour, Paul Salman.